Okay, let's look at kit questions. So I will directly come to 32 questions. The questions before them relate to those first two chapters. So I have a detailed read of that, and all of them are theoretical. Just look at them and understand. So I will jump directly to these technical questions. Okay, the first question is, in calculating the life cycle costing of a product, which of the above items would be included? So the following costs have arisen in relation to the production of a product: planning and concept design costs, testing costs, production costs, distribution and customer service costs. So all of these will be included. Remember, in life cycle costing, we include costs from development all the way to the withdrawal stage. So all of them are correct. Are the following statements about environmental management accounting true or false? Environmental management accounting provides environmental information for internal use by management, but not by external reporting. Environmental management accounting system typically makes use of life cycle costing. Remember, we saw life cycle costing, environmental costing, so this is true. And also, environmental costing is something that is used for internal. So it is management accounting basically. So management accounting is internal use information. Next, what is the throughput accounting ratio for product X to 2 decimal places? One of the products manufactured by the company is product X, which sells for 40 per unit. And has a material cost of 10 per unit and direct labor cost of 7. Total direct labor budget for the year is 50,000 hours of labor time at a cost of 12 per hour. Factory overhead is 20,000. The company is considering the introduction of a system of throughput accounting. It has identified that machine time is bottleneck in production. Product X needs 0.01 hours of machine time per unit produced, and the maximum capacity for machine time is 4,000 hours per year. Okay, remember, throughput accounting ratio simply is throughput per limiting factor divided by fixed cost per limiting factor. If it is more than one, it means it's profit making. If it's less than one, it is loss making. But they haven't asked that, they just said to calculate it. Okay, let's see. So our throughput here is 40 minus 10. Remember, only the material cost. So 30 divided by the time taken by hours, time taken by unit, becomes 3,000 is throughput per limiting factor. And then we take fixed cost divided by total hours. Fixed cost here is given as 2.9 million. But remember, it is very tricky. Fixed costs, you have to see whether it includes labor costs or not. If it is specifically told that it includes labor cost, if it is not told, and looking at the information, we have to assume whether fixed cost is included in it or not. Like here, the labor hours is given total, and the per unit per hour cost is given, so that would mean that the labor cost is not included in it. So we'll take 50,000 multiply by 12, which is 600,000, and then adding that with the other overheads, we have 352,000. So 3,520,000 divided by total machine time, which is 4,000 hours. So now taking 3,000 top and then dividing by this bottom gives us 3.40. If we round it off to 2 decimal places, remember, it becomes 3.41. If you write anything else in blank questions, then your answer would be wrong. So it said here up to 2 decimal places. Are the following statements about material flow costs accounting true or false? Remember, we saw this in environmental costing. in material flow cost accounting, waste is treated as negative product and given a cost. Material flow cost accounting should encourage management to focus on ways of achieving the same out of finished goods output with less material input. Remember, in material flow cost accounting, we look at the flow of material, and then we had a positive product and negative product. The negative product was waste, and we should try to minimize that waste. So both of these statements are true. Next, which of the following statement about activity-based costing is true? The cost driver of quality inspection is likely to be batch size. The cost driver for material handling and dispatch cost is likely to be number of orders handled. In short run, all overheads costs for activity vary with the amount of cost driver for the activity. A cost driver is activity-based cost. Remember, some of the things here are just senseless, so don't focus on those senseless things. Only focus on something that is right. Like here, the cost driver for material handling and dispatch cost is likely to be number of orders handled. So yeah, dispatch would relate to number of number of handling if we are using activity-based costing. Next, which process is bottleneck? The following data refers to a soft drink manufacturer company that passes its product through 4 processes and is currently operating at optimal capacity. We have the washing, filling, capping, and then labeling stage, the time per unit, and then machine hours available. Remember, hours available here is less, so it would seem like it is a bottleneck, but it doesn't have to be bottleneck. And then cost data is given. But remember, they didn't ask us to find throughput or something. They just asked us to find why which process is bottleneck. Okay, so we will just take the units, which is the hours, and then the time taken by each unit. So divided by 6. It will not give you exact units, but if you want, you could do it like this as well, directly dividing by 6. But because that data is given in hours, you would multiply this by 60 and then divide it by 6 if you want to know exact number of units. But directly dividing it by 6 would also tell you what is limiting factor. Obviously, those numbers will not be exact, but it will. The one that has the lowest numbers will be limiting factor. So we have 12,000 units here, and then divided by 3 minutes, we have 14,000 units here, and then multiply by 6. Remember, 60 is hours in minutes in an hour, divided by 1.50, and then 450 multiplied by 60 divided by 2. So yeah, this is a limiting factor. It has less hours as well, and it has lowest output capacity as well. So capping is limiting factor here. Next, the following statements have been made about throughput accounting. Inventory has no value and should be valued at 0. Efficiency is maximized by utilizing direct labor time and machine time to full capacity. Remember, we shouldn't be working at full capacity. The things that are the processes that are not bottleneck, it is okay to have idle time there. And material is not valued 0. It is valued at inventory is valued at material cost, not 0. So neither of them is correct. Which two of the following statements about activity-based costing are true? Implementation of ABC is unlikely to be cost effective when variable production costs are low proportion of the total production cost. In a system of ABC, for costs that vary with production levels, the most suitable cost driver is likely to be direct labor hours or machine hours. Activity-based costs are the same as relevant costs for the purpose of short-run decision making. Activity-based costing is a form of absorption costing. So they said which two of the following is correct. One, in a system of ABC costing for costs that vary with production levels, the most suitable cost driver is likely to be labor hours and machine hours. Yeah, remember, if it's something that relates to production, then in production usually we will be using machine or labor, so it is something that will be changing with that. And then activity-based costing is a form of absorption costing. It is alternative of absorption costing. And activity-based costing is same as relevant cost. Remember, it is not relevant cost because both absorption costing and activity-based costing uses notional cost, and notional cost is not relevant cost. And then the first one, implementation of ABC is unlikely to be cost effective when variable production costs are low proportion of total. It is actually going to be effective there when variable costs are lower and overheads are higher. That is the main reason we would be using activity-based costing. In environmental costing, the future cost of cleanup operations for a product or activity may be classified as which of the following? Carbon footprint, contingent cost, hidden cost, and relationship costs. Remember, it is contingent cost. When we are affecting environment and then we have to clean that, that is called contingent cost, and we create a provision for that. Which of the above statements are true? The following statements have been made about traditional absorption costing and activity-based costing. Traditional absorption costing may be used to set prices for products, but activity-based costing cannot. Traditional absorption costing tends to allocate too many overheads to low volume and not enough overheads to high volume. Implementing ABC is expensive and time consuming. Okay, the first one, traditional absorption may be used for pricing but not activity. It's wrong. Both of them have the same purpose, but activity-based costing is a little bit better at it. And traditional absorption costing tends to allocate too many overheads costs to low volume and not enough overheads to high volume. It is actually other way around. It allocates too many overheads to high volume and too little to low volume. And implementing ABC is expensive and time consuming. Yeah, this could be a disadvantage of ABC costing. Okay, I will skip through some of the theoretical part because you could just look at the answers. Okay, let's look at this one. Only 750 machine hours are available during the period. Apply the principle of throughput accounting. How many units of B should be made if the company produces output to maximize throughput and profit? Remember, this is producing products at their throughput ratio. So we will rank them according to throughput per limiting factor. Budget information relating to a company that manufactures 4 products is as follows. We have product A, B, C, D. Maximum sales demand in units is given, and then machine time is given, and then machine hours required is given, which is basically taking units multiplied by hours per unit, and then sales price and material cost is given. Only 750 machine hours are available. Remember, total required is 1,000 and we have 750 available. Applying the principle of throughput accounting, how many units of product B should be made if company produces output to maximize throughput and profit? Okay. First, let's look at the throughput, which is 15 minus 6 21 minus 10, 18 minus 9, and 25 minus 16. And then taking that divided by limiting factor. Remember, limiting factor is the machine time. So I'm going to directly take and divide by limiting factor. 11 divided by 0.20. 9 divided by 0.30. And then 9 divided by 0.20. So the one that gives us highest would be given first priority. So this one would be produced first. This one will be produced second. And then this one third. Okay, I haven't divided this right. This one is third. And then this one is fourth. Okay, they asked about product B. Product B is the one that is made second. So obviously, if we look at the time taken by A and B, it is 200. So it will be made fully. All of these 500 units will be made. You don't have to calculate it, but if you see, you take the time, total time is 100 for this, and total time is 100 for this, which doesn't exceed the 750 limit. So 55 units of B would be made. Okay. Sorry, 500 units, not 55. 55 is the contribution per limiting factor. So 500 units of B, all units. Okay. Why? Because it becomes second, and after you take the time of A, everything will be left for B, and B will be fully done as well. Okay, ABC is felt to give more useful product cost than classic absorption costing, which overhead absorbed on labor hours F. ABC is felt to give more useful product cost than classic absorption costing, with overheads absorbed on labor hours. If which of the following to apply? ABC will give us more realistic cost than absorption costing if we are using labor hours in absorption costing. In which of the following situation? Labor costs are relatively minor proportion of total costs. Overheads vary with many different measures of activity. Overheads are difficult to predict, and cost drivers are difficult to identify. Okay, labor costs are relatively minor proportion of the total cost. If that is the case, it would mean that cost doesn't vary a lot with labor costs. If you use absorption costing, it would mean that the cost would not be very accurate. And overheads vary with many different measures, which is the general feature of activity-based costing. We use activity-based costing when things change with many factors than one. Overheads are difficult to predict and cost drivers are difficult to find. We will not be able to use activity-based costing in these situations. Okay, so yeah, the answer is A and B, first and second. What is the minimum production required to close the target cost gap? A company has target markup of 25% and sells into a competitive market where the price is 120 per unit. The company's current cost per unit are 46 for variable costs and 60 for fixed costs, and it has budgeted output of 10,000 units. So what is the minimum production required to close the target cost gap? Okay, so 46. We currently have a product that we are selling for 120, and our cost are 46, but we want a markup of 25%. If I directly multiply by 75%, it will give me target cost. company has a target markup of 25% and sales is okay, it is markup. So divided by, remember always focus on margin and markup. So it would mean this is 125% divided by 125 multiplied by 100 will give us target cost. The company's current cost per unit are 46 for variable and 60 for fixed. 46 plus 60. So 106. If we compare that with 96, we have 10 target cost gap. Okay, remember they didn't say anything about variable cost being changed, but remember fixed cost is given per unit, and the more the units there are, the less the cost per unit is going to be. So we need to find that number of units where fixed cost is going to be lower. Like we want the fixed cost to be, if variable is 46 and our total cost is 96, variable is 46, so it means we want 50 fixed cost to be. So our current fixed cost is 60 and it is based on 10,000 units. It means it is 600,000. So if we take 600,000 and divide it by 50, it will give us that unit. So at 12,000 units, our fixed cost is going to be 50 per unit, and that is where we will be able to achieve our target cost gap. So yeah, indeed a very tricky question. Okay, in which of the following ways might financial returns be improved over the life cycle of a product? How can we improve the returns over life cycle? Maximizing the break-even time, minimizing the time to market, minimizing the length of life cycle. Maximizing break-even time, no. Minimizing break-even time. The sooner we earn our return, the better it is. Minimizing the time to market, yes. The sooner we release the product into the market, the better it is. And then minimizing the length of life cycle, no, maximizing. So only second one is correct here. Okay, what is the expected average life cycle cost per unit? The following information relates to expected cost of a new product over its expected 3 years life. Units made and sold. I've already done this question. When I did life cycle costing, I already did this, so look at that one. Okay, it is very similar to that question, even if I haven't done it. Okay, are the following statements about target costing true or false? A risk with target costing is that cost reductions may affect the perceived value of the product. An effective way of reducing the projected cost of a new product is to simplify the design. The value of target costing depends on having a reliable estimate of sales demand. Target costing may be applied to services that are provided free of charge to customers, such as cost of call center handling. Okay, a risk with target costing is that cost of reduction may affect the perceived value of the target cost. That is actually true. If we try to reduce the target cost, what happens that people might think that because the cost has been reduced, the quality also may have been reduced. An effective way of reducing the projected cost of a new product is to simplify the design. Yeah, don't make it complicated. Don't include too much things in it. Sometimes a product has too many things that are not necessary, and because of that, the cost is higher. So simplify design. Value of target costing depends on having a reliable estimate of sales demand. Remember, we could use target costing in combination of life cycle costing. So we could use life cycle costing to look at the overall cost over the life cycle, and we could use that as a target cost. So that will depend on how reliable our demand is, estimate is. So it is true. Target costing may be applied to service industries that are provided free of charge to customer, such as cost of call center handling. Remember, the purpose of target costing is having a reliable estimate and having the profit margin deducting from that, and then having a target cost. So if there is no profit margin, we are providing is free of charge, that whole system of target costing is not applied there. So this would be false. Remember, I will skip some of the questions in between. Okay, even though I've done that previous question, but as a revision, I will do it again. Okay. What is the expected life cycle cost per unit? Units, the following information relates to the expected cost of new product over its expected 3 years life. Units sold and made, research and development cost, variable cost, production cost, variable cost, and then fixed cost, sales and distribution cost, variable cost per unit, and then customer service cost, variable. Okay, let's see. Remember, fixed cost, just add it together. What I will do is first find variable cost, which is 25,000 multiplied by, remember, you don't have to multiply each of them separately, just add them together. It will save a lot of time. So 30 plus 60 plus 4. So I'm adding all the variable costs per unit. And then in second year, multiply by 25 plus 5 plus 3, and then 75,000 multiply by 20 plus 4 plus 2. So now, taking all the costs, 850,000 plus 90,000 plus, if we add all of 3 of them, it becomes about 1.5 million. Let me count the zeros. And if you count these 3, it also becomes about 1.5 million. And then adding the variable cost, which is 1 million, just copy from here, 3.3 million, and 1.9 million. So the total life cycle cost is about 10 million. Dividing it by units, 25, 75 becomes 100, and 100, 200. It becomes 50.95 life cycle cost per unit. Remember, the trick in life cycle costing is to take all the variable cost per unit and add it together and multiply it by once, instead of doing it separately. Otherwise, it will take a lot of time. Okay, next. The selling price of product X is set at 550 for each unit, and sales for the coming year are expected to be 800 units. A return of 30% on investment of 500,000 in product X will be required in the coming year. What is the target cost of each unit of product X to 2 decimal places? Okay, we have a price set at 550, and we are selling 800 units. We want a return of 30% on investment. So what should be our target cost? Okay, if our investment is 500,000 and we want return on investment to be 30%, that would become 150,000 profit or return. And we are selling 800 units. Dividing that by 800 units, it will give us profit per unit. If we are selling the product at 550 and we want to earn profit of 187, our target cost would be 362.5. 362.5 or 50, whatever you call it. They said up to 2 decimal places, so you will write 3.50. Which of the following should be categorized as environmental failure cost by an airline company? Compensation payments to residents living close to airports for noise pollution caused by the airport, air pollution due to airline carbon emission from the aircraft engines, penalties paid by the airline to the government for breaking environmental regulation. Remember, environmental failure cost is when you affect the environment, and the cost that you are paying for that is environmental failure cost. So all of these are those things. So the payment that you're making to residents, air pollution that you're causing, and then the penalties that you're paying. So all of them. Next, what is the life cycle costing? Remember, it's same as the previous one. The only difference is just minus this disposal cost. Okay, don't include this in cost, because this is the equipment that we are selling, and it is the money that we are going to receive. So minus this, otherwise is very similar to the previous one. Okay, in a system of throughput accounting, what is the return per factory hour? To 2 decimal places. Return per factory hour means throughput per limiting factor. Product Y to Z2 is made in production process where machine time is a bottleneck resource. Production of 1 unit of product Y Z2 takes 0.25 machine hours. The cost and selling price of product Y Z2 are as follows. We have 10, 7, 7, and then sales price, and then profit. So return per factory hour. Directly jump to the answer. Okay, we have sales price of 30 minus only material cost will give us throughput, and then taking that throughput divided by limiting factor. What is limiting factor here? Machine time, and machine time is 0.25. So dividing by 0.25, it gives us 80 return per hour. And it's set up to 2 decimal place, so it would be 0.00. What is the throughput accounting ratio for product Q to 1 decimal place? A company manufactures product Q, which sells for 50 per unit and has a material cost of 14 and direct labor cost of 10. The total direct labor budget for the year is 18,000 hours of labor time at a cost of 10 per hour. Factory overheads are 1.6 million per year. The company has identified machine time as bottleneck in production. Per Q needs 0.05 hours of machine time per unit. The maximum capacity for machine time is 6,000 hours per year. Okay, we have throughput, which is sales price minus only the material cost, and then dividing it by a limiting factor. Limiting factor is machine time, and the machine time taken by unit is 0.05. So 36 divided by 0.05 becomes 720. And then taking the total factory cost divided by hours. Remember, it didn't say whether it includes labor costs or not. Naturally, we will assume it doesn't include. And also the data is given here separately, so we will calculate that as well. So we have 18,000 multiplied by 10 per hour, which becomes 180,000. That will be added with the factory cost. 120,000 plus 180,000 becomes about 1.8 million. So 1.8 million divided by total number of machine hours available, 6,000. It becomes 300. So now taking 720, the top, and divided by the bottom becomes 2.40. Up to one decimal place would be 2.40. And remember, when it is more than one, it is profit making. In theory of constraints and throughput accounting, which of the following methods may be used to elevate the performance of binding constraint? Remember, one is exploit, one is elevate. Exploit means you use to the maximum capacity. Elevate means increasing the capacity. So they are saying increasing the capacity, not using to the maximum capacity. Acquiring more of the resource that is binding constraint. Yes, that will increase the capacity. Improve the efficiency of usage of resources that is binding constraint. This is exploit. If they say how you would exploit, then this would have been correct. Otherwise, one is correct. Improving efficiency of usage of resources that is binding constraint is actually exploiting, not elevate. Which of the following costs are likely to rise when just-in-time manufacturing is introduced? Just-in-time, remember, is a system where you only produce things when there is demand. So setup cost, raw material handling cost, raw material storage cost, customer order cost. Remember, customer order is going to be the same no matter whether you're using just-in-time or whatever you're doing. What matters is how you deliver them to the customer. Raw material storage cost is also going to be same. Only the handling and the setup cost is going to rise, because every time the customer orders, you have to start machines and stuff. So there will be a lot of setup, and then every time there is order, you have to bring material from the warehouse. So there will be a lot of handling costs as well. Okay, so this is it for this video. I will look at this other section in next video. Remember, this also relates to the first section, but they are OTQ questions which come in second section of the exam. Okay, this is it.